What I am about to tell you is something no economist, no politician, and no mainstream news channel will ever dare to say out loud. Not because it isn't true, but because if the public ever understood what is happening behind the scenes, the entire system would collapse overnight. Right now, at this very moment, the largest wealth transfer in modern history is happening quietly, silently, and almost mathematically. And while ordinary people are distracted, stressed, and struggling to keep up with rising costs, the elite have already moved. They've already positioned themselves for what comes next. They always do. Every collapse begins with a strange calm. The surface looks stable. Markets look normal. News sounds reassuring. People believe everything is going to be fine. And that is the most dangerous moment, because it is exactly when insiders make their exit. They sell the overvalued assets. They secure hard stores of value. They buy land, commodities, cash-flowing businesses, and they move their wealth outside of the system they know is about to break. This is not a theory. This is the pattern of every major collapse in history, and it is repeating again. Over the past year, all the signs have been flashing. Corporate debt has exploded to levels that cannot be sustained. Government interest payments have become mathematically impossible to maintain. Banking leverage has reached fragile levels beneath the surface, and currencies worldwide are slowly but surely losing real purchasing power. Inflation is not the enemy. Inflation is the symptom of a cycle approaching its breaking point. The public sees higher prices. Insiders see the end of a financial era. The phase we are in right now is something economists call the late cycle denial stage. Insiders know what is happening. They already saw the data. They already adjusted. They already exited the riskiest parts of the market. What they are waiting for next is the same thing that triggers every collapse. A sudden event that appears random to the public, but was predictable to anyone watching the pattern. Maybe it's a major bank failure. Maybe it's a large corporation defaulting. Maybe it's a geopolitical shock. The media will say it was unexpected, but anyone who understands cycles knows these shocks are the final domino, not the first one. When the collapse begins, it always starts the same way. Prices fall, real estate loses value, companies shut down, stocks drop 40, 50, even 60%. Millions of people panic because they never saw it coming. But the top 1%, they aren't panicking, they're buying. They are buying everything. Land, businesses, stocks, commodities, at a discount so deep that the next decade of profits becomes guaranteed. This is how wealth transfers happen. Money doesn't disappear. Money changes owners. It moves from the unprepared to the prepared, from the emotional to the calculated, from the average person to the elites who knew the cycle long before anyone else. This is the same playbook used in 1929, in 1971, in 2000, in 2008. People think each crisis is different, but the structure is identical. The wealthy create the boom, extract the profits, exit silently, let the system break, and then buy everything back at a fraction of the cost. It is not called a collapse to them. It is called a reset, a cleansing, a new cycle. Every time this happens, the middle class shrinks a little more, the poor become more dependent, and the wealthy gain even more control. Right now, we are not in a normal correction. We are in an end cycle moment, the phase where the old financial model is too stretched to survive. Debt is unpayable, currencies are unstable, global tensions are high, economic velocity is slowing, social fractures are widening. Every major collapse in history begins when these exact conditions overlap. And today, they are all happening at the same time. This moment is dividing people into two groups. On one side are the people who are distracted, emotional, reactive. The people who will face the collapse unprepared. They will panic, blame the government, blame the banks, blame the news. But none of that will save them. On the other side are the people who see the pattern before the panic begins. The ones who know that crisis is not just destruction. It is also opportunity. These are the people who position themselves early, who protect their assets, who wait patiently for the moment when fear reaches its peak and prices reach their lowest point. Those are the people who become the next generation of wealth holders after the reset. History leaves no room for confusion. Those who prepare early become the ones who own the next economy. Those who wake up late become the ones who pay for it. The cycle is already moving. The window is already shrinking. And once the collapse becomes visible to the public, it will be too late to prepare. The clock is ticking, and the pattern is repeating exactly as it always has. The silent beginning of a collapse is always the most deceptive phase, because everything appears normal on the surface, while the foundation underneath is already cracking. In this stage, the elite and insiders have access to data, patterns, and early signals that the average person never sees, and they act months before the public even senses a problem. They don't make announcements, they don't warn anyone, and they don't leave traces. They simply start repositioning their wealth, selling inflated assets, reducing exposure to risky markets, moving capital into safer or more tangible stores of value, and quietly securing anything that will survive the coming downturn. This behavior is never loud or visible. It is intentionally subtle so that markets don't panic prematurely. Meanwhile, the public remains trapped in a false sense of security created by stable prices, reassuring news narratives, and the illusion of economic normalcy. The danger here is not in what is happening loudly, but in what is happening silently behind closed doors. This silent exit phase shows up in small signals: decreased insider buying, increased insider selling, institutions reallocating funds, companies quietly lowering revenue expectations, and governments publishing optimistic forecasts despite internal warnings. These are the cracks that insiders watch, and when enough of these cracks align, they know the cycle has entered its terminal stage. They don't try to fix the system because they understand it is too late. Instead, they prepare to survive and benefit from the next stage. The public, on the other hand, is still distracted by everyday struggles: rising living costs, job pressure, entertainment, and political drama, and they do not realize they are standing at the edge of a historic economic shift. The silence is not accidental, it is strategic. If insiders openly admitted the truth, that the system is overstretched, debt is unpayable, and liquidity is drying up, it would trigger mass panic, bank runs, and a collapse far earlier than they want. So the narrative remains calm and controlled, while the real moves happen quietly in the background. During this phase, those with power do not try to stop the collapse. They position themselves to control what comes after it. They shift into cash when others are over-leveraged. They acquire hard assets while prices are still stable, and they reduce liabilities, while the public is being encouraged to take on more. The majority of people don't notice, because nothing dramatic is happening publicly. Markets don't crash overnight. They deteriorate slowly at first. Currencies don't lose value in a day. They erode gradually. Systems don't collapse loudly in the beginning. They weaken silently beneath the surface. This is the phase where the wealth transfer truly begins, long before the crash becomes visible. By the time the public realizes something is wrong, the insiders have already exited the risky areas, secured their positions, and created a buffer that protects them from what is coming. It's a one-sided game where information determines survival, and silence ensures that only a few players even know the game. Has started. Every major financial event throughout history follows a recognizable and predictable cycle, and the reason this pattern keeps repeating is because human behavior never changes. Greed accelerates the boom, denial delays the warning, panic fuels the crash, and opportunity rises from the ashes. When people say, "This time is different," they usually mean they hope it is, but the underlying mechanics of debt, liquidity, confidence, and speculation never shift. The script remains the same, only the actors change. In every era, the wealthy and well-informed follow this cycle deliberately, while the public walks into it unknowingly. At first, the system inflates through easy credit, low interest rates, and artificially stimulated markets. People feel richer than they are, assets rise fast, and risk becomes invisible. This is the expansion phase that pulls everyone in emotionally, makes them confident, and convinces them that the good times will last longer than they realistically can. But every expansion creates its own collapse, because eventually prices rise too fast, debt piles too high, and liquidity becomes too thin to support the inflated structure. When insiders see this, they don't wait for the news to confirm it. They act based on patterns they've studied for decades. They remember how the dot-com bubble unfolded, how the housing market cracked in 2008, how the 1929 chart looked identical to today's. They know that once markets disconnect from real economic health, gravity eventually pulls everything back down. This recognition triggers a quiet repositioning, while the public continues believing in endless growth. What makes this cycle dangerous is the timing. Insiders always move months before the public even senses a problem, and by the time the public enters the panic stage, insiders are already sitting on liquidity, waiting for the inevitable correction to begin. Then comes the denial stage where the data is clearly flashing red, but public sentiment refuses to accept it. Governments release optimistic forecasts, central banks speak confidently, and analysts claim the downturn is temporary. This phase is not unique to any era. It is present in every bubble throughout history. The same language, the same reassurances, the same overconfidence. The public convinces itself that past crashes don't matter and that modern economies are smarter. But the structure of finance is built on human emotion, not logic. When denial fades, the system moves toward the breaking point. A small event, a default, a bank failure, a geopolitical shock, triggers the chain reaction. Suddenly the cycle reveals itself, and people say the collapse came unexpectedly, even though it was mathematically inevitable. Once the trigger hits, the historical pattern completes its familiar path. Confidence collapses, asset prices fall rapidly, and fear replaces greed. Everything that was overpriced becomes cheap. Everything that looked unstoppable becomes fragile. This is when the wealth transfer becomes visible. The same thing that happened in 1929, 2000, and 2008 happens again. Those who cling to the old cycle lose, and those who understand the pattern regain control. The cycle repeats not because the system is broken, but because those who benefit from it rely on the fact that most people never learn from history and never recognize the pattern until it's too late. As the financial cycle reaches its late stage, the system becomes extremely fragile, and all it needs is a single spark to reveal the truth that has been building quietly underneath. This spark is what people call the triggering event, but in reality, it is only the final nudge that exposes a collapse already set in motion. The structure behind the economy is like a stretched rubber band, pulled tighter with every year of rising debt, declining productivity, inflated asset prices, and weakening currencies. Everyone sees the apparent stability, but few understand how much pressure is sitting beneath the surface. This pressure increases slowly and invisibly until one event snaps the band completely. And when it snaps, people think that one event caused the collapse. But the reality is that the collapse was inevitable long before the public noticed anything was wrong. The trigger can take many forms. Sometimes it is a major bank announcing sudden losses that cannot be explained. Sometimes it is a large corporation defaulting on debt it was never able to pay back. Sometimes it is a geopolitical conflict that sends shockwaves across global markets. And sometimes it is something as simple as an unexpected interest rate decision. The event itself is not the real cause. It is just the excuse the system needs to finally reveal the instability that insiders already prepared for. Throughout history, the pattern is exactly the same. There is always a moment the media labels as the turning point. But insiders know that the turning point comes months earlier, when they quietly exit risky positions and secure themselves before the storm. Once the trigger occurs, confidence, one of the most important pillars of any financial system, breaks almost instantly. Markets are not driven by numbers. They are driven by belief, sentiment, and perception. When the trigger hits, perception shifts from optimism to fear in a matter of hours. Investors begin selling. Companies pull back spending. Consumers panic. Banks tighten lending. Liquidity dries up. What was previously stable becomes unstable, and what looked strong suddenly collapses under its own weight. The public, who saw everything as normal just days before, begins searching for explanations. But explanations don't matter. Once the trigger breaks confidence, the rest of the system moves automatically. The most dangerous part of this stage is how quickly everything unravels. Markets that took years to build can lose half their value in weeks. Businesses that survived for decades can shut down within months. Families who felt financially secure can find themselves underwater without warning. The trigger doesn't just reveal weakness, it accelerates it. The system shifts from slow decay to rapid destruction. This is the moment when the illusion ends and reality takes over. Debt becomes unbearable. Liquidity becomes unreachable, and assets become unsellable. Insiders understand that this stage is unavoidable because the system cannot collapse quietly. There is always a single moment that exposes it to the world, and that moment is when the cycle becomes visible to the public. But by the time the public sees the collapse, the insiders have already moved their wealth, reduced their exposure, and positioned themselves to take advantage of the chaos. The triggering event does not surprise them. It confirms what they already anticipated. It is the signal that the next phase of the wealth transfer has officially begun.